Hi there, and welcome to the weekly wrap video. So in terms of what we've seen this week, we'll start with China, who cut their RRR by 50 basis points this week, and this did boost market sentiment, with speculators stating that this will stabilise the Chinese markets, and as such we did see an uptick in global equities. Furthermore, this week we did see continued upside in the likes of WTI and Brent. This came after speculation from oil-producing nations that they have agreed to a meeting, with some stating that they will either have this meeting at the latter end of this month, with March 20th a potential date, with others stating that it will be conducted in April. It's also worth noting that despite this uptick we've seen throughout the week in oil, we did see a huge build in the DOEs around the 10 million barrel mark. However, it is worth noting that refineries did massively improve their output, and therefore we did see the immediate move lower seen in oil pairing. Furthermore, this week we have seen strength go through the sterling. This came after notes from the likes of Barclays stating that the Brexit fears were too priced into the Great British Pound, and as such we have seen some of that unwound this week. We kicked off the week around 139 in cable, and we look set to finish around the 142 level. However, firmly this week, attention was always going to be on the non-farm payrolls released today, which came in at a much higher figure with 242 printed, with the street looking for 195. However, it is worth noting that the initial gains seen in equities and the gains seen in dollar, alongside the downside in treasuries, has been somewhat erased. This came after the average hourly earnings came in negative for the first time since 2014, and therefore people have speculated that the potential weight this may have on consumption and therefore inflation may weigh on the Fed's minds, given their recent focus on inflation. That's it from me. I wish you a very good weekend, and we'll see you next week.